What data is used to predict life expectancy for life insurance? Imagine trying to guess how long someone might live based on a bunch of different pieces of information. That's exactly what life insurance companies do during the application process. When you apply for a policy, they gather a lot of data to figure out your risk level and how long you might live. This helps them decide whether to approve your application and what premium to charge. First, they look at personal details like your age and gender. Younger people tend to live longer, and women usually have longer lifespans than men. They also consider your job and hobbies. If you work in a risky profession like construction or enjoy extreme sports like skydiving, that can increase their estimate of your risk. Where you live matters too because some areas have higher health risks or different mortality rates. Next, they examine your health history. They want to know if you have any ongoing health issues like heart disease, diabetes, or cancer. Past surgeries, current medications, blood pressure, cholesterol levels, and body mass index are all checked. They might also review your family's medical history because some health conditions run in families. To verify this information, they often requiring a medical exam, which includes blood tests and other health checks. They also look at lab results and prescription records to catch any undisclosed health problems. The Medical Information Bureau, a shared database, helps insurers verify your medical history and spot inconsistencies. Lifestyle choices are also important. Smoking or heavy drinking can significantly increase your risk, so they ask about tobacco and alcohol use. Your daily habits, hobbies, and even your driving record can influence their decision. Multiple traffic violations or a DUI suggest riskier behavior. Financial data plays a role too. Insurers review your income, assets, debts, and number of dependents. They may look at your credit score and financial behavior because these can hint at your overall risk profile. A criminal record might also be considered as part of the risk assessment. In recent years, insurers have started using third-party sources like electronic health records, healthcare claims, and even social media activity. These sources help paint a fuller picture of your lifestyle and health. Motor vehicle records and prescription databases are checked to gather more risk-related information. Finally, they relying on statistical data called mortality tables. These are charts based on years of research showing how long people of different ages and backgrounds typically live. Advanced algorithms and artificial intelligence are used to combine all this information. These tools help insurers create a risk classification for you, such as Preferred Plus for those with the lowest risk or Substandard for higher risk applicants. All of this data collection happens during the application process. You provide much of it upfront, and the insurer verifies and supplements it with medical exams and external data sources. Automated systems now speed up this process, making decisions faster and more accurate. So, in the end, predicting life expectancy for life insurance involves a mix of personal details, health information, lifestyle habits, financial data, and statistical models. This comprehensive approach helps insurers set fair premiums and offer coverage that matches each individual's risk profile.